For more about this week, we're joined by William Lee. He's chief economist at the Milken Institute. Good to see you again, William. Last time we had you on, you said, don't panic. I got my cameraman here who's telling me I should panic. Which one is it? Are we panicked or not panicked now?
If you were living in Europe and in the heart of the euro area, I would say you'd start to get concerned now, because they were always able to say Credit Suisse was not part of the euro area. That's the Swiss's problem. And the Swiss have been shady for years and years. But now we're asking what's happening with Deutsche Bank. Now, Deutsche Bank has also been kind of a basket case among all the global systemically important banks, but this is a big one. And if the markets are starting to sniff out some vulnerabilities, this is where we should be concerned, because Christine Lagarde was saying, we're going to be raising interest rates regardless of the banking crisis, because the banking crisis is not affecting us. Now it's affecting home.
Look, Christine Lagarde said that the system in Europe is much, much better off than was in 2008. Things are strong, they are stable, they have high deposits. I mean, I'm not saying that you think she's a liar, but you're not echoing what she is saying. What's the difference here?
We can all say system is better because of the reforms put in place. But then we have a Silicon Valley bank that got away with murder, and the supervisors didn't do a damn thing about it. Now Christine Lagarde's going to have to look at her own people and say, did we do enough with this very systemically important bank called Deutsche Bank? Did we put them on the right track? Right now, they are having trouble becoming profitable. They're having trouble making as much money as the other important banks. So what is it that the markets are sniffing out? That's yet to be revealed.
Well,
but this is something where
exactly is it bad loans? Is there no? I mean, they can't pull their deposits because the money has to go somewhere. So I don't buy that people are just pulling all their money out of these giant banks. I mean, it literally is too big to fail for Germany. So either it's a structural issue with the actual business, or it's exterior problem where people are pulling out their money, and I think it's the former. But I haven't read anywhere, so I'm just wondering, are people yelling fire without seeing the smoke?
They're sniffing that they smell an odor. It may not be smoke, and they're trying to find where the smoke is coming from. Deutsche Bank is the best suspect in Germany because it's the weakest of all the big German banks. And so that's why people are looking at it very carefully. And Christine Lagarde is absolutely right to say our system is safe, but the individual players in the system are not equal, and Deutsche Bank is the least among equals.
You know, I was around in 2008, and I know you were too. And I felt like that was an awakening for all of us in the business, right? Whether you were a watcher or you were the middle person or you were actually in the banking system. And I worry that we haven't learned anything, or whatever we learned maybe wasn't enough. We were supposed to ring fence these companies so that they wouldn't be systemic, if you will, and cause everything else to blow up. And here we are 15 years later. And I'm mad. I'm mad that we don't have the trust of consumers. I'm mad that these banks aren't as stable as we'd like them to be, and I just want to be wrong about this. Tell me I'm wrong.
You should be mad because these systemically important institutions have not been sufficiently ring-fenced so that if something goes wrong with one of them, it's not sure thing that it won't affect everybody else. Deutsche Bank is of that big scale that it could affect everybody else if there really is something wrong. But that's a big if. Remember, Phil, we don't know what's wrong with Deutsche Bank yet. We know it's not really strong.
Right, but we can't look, but it's not fair to yell fire. If Deutsche Bank collapses, it's the end of a lot of banks around the world. And I'm talking about American banks, I'm talking about Asian banks, I'm talking about European banks. I mean, this would be a Lehman crisis, and I don't think we should be yelling fire because there's no evidence that something bad has happened. It's more of the fear, if you will. Like you said, oh, they smell smoke, but we haven't seen the smoke or the fire. I mean, isn't that fair?
Absolutely, absolutely. We smell smoke, and some people are yelling fire because a lot of people have short stakes in Deutsche Bank. They're shorting the stock and they want to make some money out of it. And here's a great opportunity because they are a potential weakness. But it's a potential weakness. We haven't seen anything wrong yet, and we shouldn't get ahead of the game. And the authorities are trying to tell us all, don't worry until we find that there really is smoke coming from Deutsche and not someplace else.
And if the banks collapse, the economies collapse, we know what's going to happen. I'll give you 45 seconds to fix the whole entire global financial market. What needs to be done? Does it need to be a coordination among all the major central banks? Is it something Europe has to do? Because I feel like everyone's trying to do something, and every time someone says something, we all go, well, but.
Bill, The way we fix things is not rely on the authorities. We can't rely on the San Francisco Fed. We can't rely on the California bank regulators. We can't rely on the ECB. Market surveillance means you, the individual investor, have got to do your due diligence and find out what's going on in the companies you're putting money into. Your responsibility has not been up to snuff because you didn't quite sniff out what's wrong with Deutsche Bank. Other people are.
I don't know. William, I mean, I love you, but I just don't see the ability of the average person to do their due diligence on the credit quality of the banks that they, get your paychecks in, or wherever they put their money. I mean, there has to be a better way. There is responsibility of governments to provide some sort of level of certainty or trust, or if you want to call it a backstop, then call it a backstop. I mean, we do need that.
That's why we have equity. That's why we have equity analysts. They're supposed to be sniffing around for what's wrong. You and I can't do it, but there are experts out there, and they're not doing their job in the private sector.